Do you think it is possible to predict with a high degree of probability where the price will reverse? Is it possible to predict with high accuracy where the price will rebound after a sharp rise or fall? The answer is yes, you can. There are specific areas on the charts that are a magnet for price, and market algorithms are always looking to fill these ranges. Watch this video to the end and you'll learn why this happens and how it works. I'll show real examples on a Bitcoin chart, and even if you don't believe me, you can check it out yourself on history. This is the second lesson in a series of tutorial videos on the smart money concept, and in it we will discuss in detail such an important element as balance. In this video, we'll go into more detail about them separately to better understand how to capitalize on these formations. And before we continue, don't forget to subscribe to the channel to see more trading videos in the future. So, imbalance is a 3-candlestick formation. The fluctuation, which is formed between the extrema of the first and third candles, clearly shows the price range where there was disequilibrium between sellers and buyers. To simplify, we can say that in the bullish imbalance zone there were no sellers, and in the bearish imbalance zone there were no buyers. In other words, imbalance is formed because there was no liquidity from either sellers or buyers in this range. That is, one part of the market was not able to make transactions in the necessary volume due to the fact that the price was offered unevenly. And the market algorithm works in such a way that they will always try to effectively balance the price so that both buyers and sellers have the same opportunity to buy or sell an asset in any price range. This is why sooner or later the price will return to the imbalance zone. Moreover, you already know from the first lesson that the big players control 100% of the price movement. So, the big players are institutional market participants. That is, these are large financial organizations that have complex trading strategies, and they have their own interests to buy or sell only in certain price ranges. And if they have an imbalance in their zone of interest with a price movement, it means that they have not been able to fully accumulate their position at the right prices. Therefore, they will put pressure on the price to bring it back to the imbalance zone and fully fill their long haul or mirrors to short. This may not seem logical to you at first glance, and you may argue that they can make trades at a better price. But no, it doesn't work that way. Smart capital representatives have an obligation to other financial organizations. They need to accumulate a position only at certain prices in order to make a trade with another company, and technical analysis has nothing to do with it at all. By the way, classical tech analysis does not operate with such a concept as imbalance at all, and is more like guessing on coffee grounds. Now let us move on to real examples. Let us open the FRA chart. As a result of this fall, several imbalances were formed, and the nearest one was here. It was from this imbalance that the price turned around. As a result, a sidewall with such boundaries was formed. Next, we see a correction of the lower boundary of the sidewall and a deviation from below. After this correction of the lower boundary, I expect to move to the upper boundary of the sidewall. Immediately after the price reversal, a bullish imbalance was formed, from which the price reversed in the future. Then we saw imbalances working off here, here and here. In the end, the price still came to the upper boundary of the rent, and we saw the deviation from above. After that there was a sharp fall, with the formation of new bearish imbalances. The first one has already given a reaction, the second one will also be filled in the future. Everything I just told you will work the same way on any time frame from monthly to minute, because the market is fractal. And it does not matter if you are interdealer trading, position trading, swing trading, or scalping. Imbalance will form on all time frames. Moreover, as a rule, within a daily imbalance you will find a 4-hour imbalance, an hourly imbalance, a 15-minute imbalance, and so on. As a result, by moving to a lower time frame, you will be able to identify the potential price reversal zone as accurately as possible and open a more accurate position. You probably have a logical question: if imbalance or liquidity is a magnet for price, is it possible to simply open a trade in the imbalance zone and wait for a price reversal? Sometimes this will be appropriate if you see that this imbalance is in your zone of interest based on the older time frames. However, it is important to realize that not every imbalance works properly. For example, this bearish imbalance did not produce a meaningful reaction because we had a local uptrend to the upper boundary of the range. It was appropriate to go long here. These usual imbalances were also not worth considering for opening trades, as the low of the upper boundary of the sidewall occurred, after which the price was expected to fall, which happened. I strongly advise against entering a trade from the first imbalance you see. Be sure to take the context into account. Now I will give you a couple of simple examples that occur very often. You can already trade effectively based on them. First setup. Formation of a single piggyback, which removes liquidity, i.e., collect stops, followed by an impulse movement in the opposite direction and formation of imbalance. Second setup. This is a double single or double top, which removes liquidity twice, followed by an imbalance formation. And now I will show you how to use these setups on real charts. And not only on Bitcoin, but also on altcoins. I will intentionally show the following examples on the lower time frames, from hourly to 5-minute time frames, and you will be convinced that the SmartMoneyConcept can be effectively traded not only positionally, but also intraday. And even for quick scalp trades it works great too. Coin. Hourly chart, updating the previous significant high, sharp reversal in the opposite direction forming imbalance. Enter the deal from 50 of imbalance. Stop behind the high, take on the nearest significant low. Litecoin hourly chart. A double bottom is formed in the support zone with the subsequent formation of imbalance. Support zones here a mitigation block. Here we also enter from 50 imbalance. Stop behind the low. By the way, in the near future I will post a new video on the channel about how to determine the premium and discount zone using the Fibonacci grid. So, subscribe to the channel so you don't miss out. At first it will be difficult for you to visually determine the imbalance area on the chart. That's why I recommend using special indicators in TradingView, which will do this work for you and automatically mark all the imbalance areas on the chart. They work very clearly and look like this. These indicators will make your analysis very easy. Indicators Afiag, Nephew Sam and Afiag Madness Joe Smattle, and how to use indicators I told in the first video. If you don't know how to do it, go to watch this video. Now a couple words about entry and exit points when trading imbalances. Usually the price will fill 50 or 100 of the imbalance. These are the trigger points for placing a limit order to open a position. In the examples above, I would usually open trades from 50, but sometimes price will just touch the imbalance and reverse without even filling 50. You can place a limit order at the beginning of the imbalance to guarantee entry into the trade, but then the risk-reward ratio deteriorates. Every trading situation is unique and you will have to navigate in the moment, taking into account additional factors. Personally, I only sometimes leave a limit at the beginning of imbalance and more often open trades from 50 or 100 of its filling, especially on higher time frames. Also, I try to go to the lower time frame and already there find a nested imbalance inside the imbalance on the higher one to clarify the expected area of reversal. To accurately determine the point of 50, use a Fibonacci grid and where to put the stop loss. If you risk to open a deal only on the basis of imbalance, then the stop loss can be put for the maximum of the second or first candles or for the nearest high or low. If you additionally took into account such elements as order block, breaker, mitigation block, candle shadow or other setups, then the stop loss is put for them. Take profit is put on the nearest liquidity pools, i.e., significant highs or lows, and also on the nearest significant imbalances. Just make sure that with the profit-risk ratio, it is acceptable to you. I recommend a minimum of 1 to 3, so you have seen by real examples that imbalance is a magnet for the price. This tool together with liquidity pools should become the basis of your analysis. If you want to learn how to understand the market and predict the correct price movement with high probability, when you start applying imbalance in trading, your profits will increase significantly. You will know where the price tends to go and where the stop will be. As a result, in addition to profits, your confidence and peace of mind will increase. In conclusion, put likes, subscribe to the channel. It motivates me to make new useful videos, and also write in the comments what topic you'd like to see a new video on. If your comment gathers enough likes, I'll record a video on the topic you ask for. Good luck to everyone and trade wisely.